Hey team, hope you're well. Today I'm going to be explaining how I bought my first home as a 24-year-old from New Zealand. And I'm just going to highlight exactly like things that I found valuable throughout the whole process of me being a mortgage broker specifically, and how I think it would be valuable for someone that was in the position of myself when I was, initially first looking at buying a property, and some things maybe I should have been thinking about in more detail. So hopefully that will be insightful for you guys. What I've prepared is I want to take you through an assessment of how a bank is going to look at your position and how they actually go about it, which I think is a really, really helpful thing to understand. So there are two key metrics that need to be met in any sort of application when you're applying to buy a property. One is you've got to display evidence to a lender that you're being able to make the repayments on the future mortgage with your current financial position. Okay, so that's key. So for my position at the time when I bought my first home, I'll share and be fully transparent with some of the numbers of my position. The income I was earning in my role as me, just coming into the industry, being somewhat of a support worker in the mortgage advice space, right? So I was helping, other mortgage advisors with their clientele and operating in that space and earning a PAY salary. This is what I was earning, about $60,000 per year. Okay. Now, how a bank is going to look at that income is they're going to define, what is the recurring income coming in for any applicant that's doing an application. So for me in this scenario, I was the one that just bought this property. Okay. So they're going to look at that income as well. When I bought my property as well, I actually said that I was going to have a boarder living with me in this property acquisition that I was buying. Okay. So this was going to be recurring income. In the event when I found a property and I was going to buy, I said, look, I'm going to have $250 of weekly rental or boarder income coming in when I find a property, okay? So that's recurring income coming in after the fact of me buying a property, okay? Now, the other thing a bank or lender is going to want to understand is what are your recurring expenses coming out? So you may have heard over the last few years that, things like Uber Eats and, discretionary expenses are taken really seriously, but ultimately all they're after as of right now in 2026, they want to know what are the recurring expenses coming out of your account, right? They want to look at the recurring income, recurring expenses. So in my calculator that I use, or what we use at Blueprint Finance for any sort of a servicing assessment, is we will look at the applicants involved. So in my case, there was just one applicant because I was applying on my own. I have one personal vehicle that I have, no dependents under 18 that I have to take care of, okay? So these are my sort of fixed expenses. How a bank will actually determine how they calculate these expenses is generally they'll assess like a minimum fixed expense for the household. So if there's one applicant, in this case me, this calculator that we use deducts automatically $1,250 for like essential expenses for like food, utilities, phone bill, anything sort of essential. There's a minimum fixed expense that is incorporated, okay? Any vehicles, like any personal vehicles owned, $250 per month is generally automatically deducted. It does differ from bank to bank, but this is just sort of a kind of combination of all of the different bank calculators that are used, okay? So this is just ultimately my position, all right? So both of these metrics. For insurances, for this example, I'm just going to put these two figures for insurance and rates. So this is consisting of my property insurance, health insurance, and vehicle insurance. I know it is quite low, but these are what I pay per month across the board. If you're wondering, I pay about $2,000 a year for my property insurance, which is $167. I have third-party vehicle insurance, and I think I pay maybe $70 per month for my health insurance. So the sum of all them are these, and then I pay $2,068 for my rates, which is actually $172 per month. I don't really have any other huge recurring expenses personally. Subscriptions, maybe I pay maybe about actually $150 per month personally, and then maybe other discretionary expenses I have like shopping, personal care, entertainment, etc. Maybe it's $200 per month. Banks probably don't care about this much, to be honest, because it is discretionary. Maybe it's up or down month on month, but these are the ones they really, really care about. Okay, so this was my position. Furthermore, I'm deducting 3% to KiwiSaver in this calculation. I don't have a student loan, or I didn't have a student loan actually at any point in time or when I was doing this application. And then the other thing in this assessment to determine what I could service at the time were these figures, okay? So I had a 30-year loan term, as that's the longest loan term you can be approved for as of 2026 in New Zealand. And this rate, 6.5, is the bank's current test rate. So in a servicing assessment, they want to make sure that you can actually afford this rate rather than the rates that are being offered that are generally a little bit lower than the test rate that's being offered here. So with all this being said, this is how my servicing assessment stacked up of what I could borrow, given my calculator that is being displayed here. It was sitting at $379,000, my max capability, okay? But this is ultimately it, what is happening in a servicing assessment, okay? So that's one box of two that must be ticked in any sort of application, okay? The next one is regarding equity, okay? So you might have heard, if you're watching this video, that you can buy a property with, say, a 5% deposit or a 10% deposit, and that is true. You definitely can. I bought my property with a 5% deposit, as we might chat through a little bit shortly. But in doing it with a 5% deposit, the attitude you have to understand is if you're going to request a loan and have a 5% deposit, that does leave the lender that you're approaching to be quite vulnerable, right? So in my position, the property I purchased for $327,000, my loan was about $310,000, okay? So in the event that I'm not being cooperative with the repayments on this, now the bank is going to be pretty nervous, okay? Because now they might have to, do a mortgagee sale. They're going to have to get an agent to list the property, and they're probably going to ask for 15 grand or whatever it is. They are probably going to need to have a lawyer to, sort out all of this, legal action that needs to be done, right? It's going to be expensive for them to do that, and they might not necessarily make their money back and be at a pretty significant loss, okay? So they're vulnerable in this scenario. So to mitigate that, what they will normally do is charge a higher interest rate than what you would get as if you had a 20% deposit, okay? So for example, if you have a 20% deposit, you can probably expect like an interest rate of 4.49. If you have 15%, normally a main bank will charge about a 0.25% margin on top. So that would be around about this. With a 10% deposit, it's roughly 0.75% on top. And for a 5% deposit, depending on the bank you go with in the process, whether it's through the Kind Water first home loan or another main bank solution, 5% deposit is 1.25% margin added to the interest rate you're paying, okay? To mitigate their risk in the scenario, right? So I had a much higher rate at the time in doing this, but the idea you need to have if you're looking at buying a home yourself and you're wondering, how can I do this, is you can ultimately do it in these scenarios, right? The attitude should be is, how does it make sense for the bank, right? The bank needs to ensure that whatever amount of money they give you, they're not going to lose any money from this, right? You have to be able to service that loan continuously with a surplus of how this is presented, and it's got to make sense to them, right? So any sort of application that is sent, there will be an assessor that is looking at this deal for the bank and if it makes sense, right? From these two metrics specifically. Another layer to this is also credit side of an application, right? So even in the event if you have equity or a deposit, maybe if it's even larger than 20%, and you can service the additional debt, if you have a history of not repaying loans on time, even if it's not mortgage related or whatever, a lender is probably going to be suspect of that, right? They don't want to be the one that gives you the money and then they're going to be the new entity where you're not, making the repayments on too. So credit is another thing that has influence, but a lot of times, depending on how the application is being presented, there has to be mitigants to support the justification for them giving you the funding or money, right? So that's another layer, but these two are the absolute fundamentals of if an application is going to be approved, whether it's for a new purchase or if it's for lending being approved, basically. So those are the key things I wanted to highlight. But this is only how I went about buying my first home, right? I needed to make sure that my position made sense to a bank where they would give me the funds. And then I looked for an opportunity in my area that I could buy. And I actually will highlight how I went about that whole process right now. I'll share my screen on something different. So whenever I'm searching for property in New Zealand, I generally will always like to navigate from the map view, just because a lot of times if you're going to use, say, TradeMe filters like these and try to be a bit more precise with the suburbs, you can either get too many properties within a certain area, or maybe properties you're not necessarily interested. Like, for example, I didn't want to have to purchase a property in the CBD or like an apartment or leasehold land or anything like that, right? So if I search in Auckland City and I filter by lowest price for, what level I could afford with my servicing assessment, majority of the time I'm going to see like these apartments or removable houses, because majority of them are showing up right here in the CBD. So if I navigate on map view, where I was personally interested was sort of around this sort of radius, right? A little bit like central to East Auckland, but I didn't want to have necessarily anything in here. So rather than using Auckland City specifically, I would just search like this, and then in the map view area of where I wanted the properties to be. So if I search, probably around here is what I was looking at the time when I was trying to find a property I was after, this is exactly what I was doing. Okay, a lot of these are removable houses, so I wasn't looking at these specifically, but with my borrowing ability, I probably wouldn't be able to buy for more than $450,000 with my position. So I was filtering like that, and I didn't want to have like a lot of these properties that were like removables or apartments or whatever. So in this scenario, there's 22 listings right now with these specifications for a property that I'm potentially looking at. When I look, I always like to filter by lowest price as well when doing this sort of navigation, okay? The reason why is you'll find a lot of listings in Auckland specifically are being sold by auction, or maybe they have different variety of sales methods. So there's 5 different sales methods on TradeMe, right? You've got price displayed, negotiation, Auckland, auction, tender, and deadline sale. So in doing the process of filtering by lowest price, I can get a gauge if a property is being listed by another metric that doesn't have an asking price, what it will likely go for. So right now we've got a listing here being listed for 360,000, 379,000. Maybe there's an example here. Price by negotiation, 388,000. So it's likely, if I'm interested in buying a property like this, and this fits my parameters, I know it's probably likely they want to have an offer somewhere between the price of these. And this is what I would do. If you're looking at buying in Christchurch or Wellington, and you go through the servicing assessment and your equity, this is how I'd navigate to try find a property that is within my parameters, and how I would go about it. So hopefully that's helpful, guys. But that's ultimately how I went about buying my first home. If you do want to have an analysis and get more insight about how this whole process works, I'll leave all of my details in the description where you can get in contact with me and we can do a full analysis and try put a plan together to help with this whole journey of you buying a property, whether it's your first one, or if you just want a solution for maybe buying another property, or if you've got an existing loan and want a better deal. I'll leave that all down below. And also, if you don't want to reach out to me or work with me, I'll leave some videos on the screen that you can check out that might be of use. Cheers, guys.